July 24th, 2025. I'm just looking at something here. My software is acting up. I don't know if my face is showing. I don't think it is, but if it is showing, but all right, whatever. I'm just going to start. July 24th, 2025. Today was a trading range day. It was, for the first piece of the day, it was a channel. It wasn't a strong channel, but you can see we consistently got higher lows. And then we broke the higher low pattern here on 55. We got a lower low, and then we got a lower high. So you have a lower low and a lower high. So now we're officially in a trading range. It was a trading range, but there's no, you're missing the lows by a couple points and you're going over the highs by a couple points. So the whole thing was absolutely a trading range, but it really just wasn't. It just had a slight bull slope. You can see yesterday we had a large spike, a pullback, and we've been in a channel, and now we're evolving into the trading range phase of the market cycle. So as far as possible trades today, 3 and 4 consecutive bull bars, pretty strong, very likely to get a symmetrical second leg. And you can see it does end up getting it, but it ends up getting it from lower. And it's hard to hold if you get something like 8 and 9. So that can be the issue with holding for symmetrical second legs. But if you do the research and you trust it, sometimes you just have to learn how to sit through these pullbacks. But tough to be looking to buy more as 8 and 9 are closing. So pullback 5 and then another bar up on 6. 5 was strong enough that it'll probably get another leg sideways to down. You can see traders, they weren't really buying the close here. They were more interested in buying the 3 high. When they buy the 3 high, we get another leg up. 8, 9, you can sell 8 and 9. I wouldn't blame you if you did. However, something to keep in mind is that we've really only had one close below the moving average in the past, 100 plus bars. So it's around 100 bars. So it's a little bit difficult to want to sell the close of bar 9. 10, it's a swing trade. So this should probably still get another leg down. We might have to go back to the 9 close or a tick below 10. If I was to buy above 10, I'd use a wider stop. So lower probability trade on 10, but still a credible swing trade on the open. 12, 13, 14, you can buy the close of 14. I did not. I was doing something. I was talking to one of the people I talk with every day, and it just got past me on 15. I just was a little bit too late, and I set a limit order to buy the close on 16 to see if it would pull back. I assumed it would, and it did not pull back. So we ended up going to the 1 hour target. So I did miss out on that trade. 19, 20, and 21, 3 bar micro channel, but it's like 3, 1, pullback 2, pullback 3, and then a big outside down bar on 22. For what it's worth, an outside bar is what you want to see as a pullback when you're trading the 3 bar micro channel. If it starts with an outside bar, there's a better chance that the trade's going to succeed. But it's leg 3, and this is a large surprise, and it's an outside bar retracing basically 100% of the range. So that is not what you want to see. So contextually, the wrong time for that sort of surprise down if you were buying. If you did buy for any reason and you scaled in, this is your break-even bar. You should take your half an hour whenever you get a surprise against you. And there it is. But obviously I was still flat. We had 3 legs down and 28 and 29. Sorry, I'm a little bit all over the place today. Anyways, 28 and 29, we should get back up here at some point, not necessarily now. If you're buying betting that it's a bull trend. So if you're buying here, you're betting that we're going to be some sort of bull trend and keep creating these higher highs. And we did not keep the gaps open with this, right? We didn't keep this gap open. So odds are it's not going to be a trend day. 30 and 31, good reversal and follow through. I'd probably rather wait for more confirmation rather than selling. It could be leg 4 and you might be selling the bottom of the channel line. And I did sell the close of 32. I thought that was a good short. It might be a late leg, but it's a change in the market rhythm. It's the biggest move that we've had so far in this, and it's 3 bars, and we haven't had anything else that's 3 bars. So it's potentially a fresh breakout, breaking out below the potential bull flag. Maybe get a measured move, which we did. 33 follow through, so good for the bears. Expansion on the follow through. So very, very high probability at this point, 90+% chance that this trade is going to work. So some traders will set a limit order to sell more at the 32 close. You can also just sell the close at 34 or sell a tick above 34. It's a bad buy after 4 consecutive bear bars. You do not want to buy, or 4 consecutive anything. You do not want to trade the first reversal. As you can see, we went below it, 35 and 36. I did take the sell. So 35 and 36 reversal follow through. I sold the low tick of 35 during 37, basically taking a chance that we would get one more leg down to here. But after you get 38, I have to get out. So I lost a point or so. This is strong enough that, like I said, I thought we might get 3 legs down. And then after 35 and 36, it was reasonable to take a chance that we got one more leg, since that is a reversal and follow through. 39, 3 straight bars. So 3 bar microchannel, 37 through 39. I didn't take it just because I've been real paranoid about trading against tight channels, especially the first reversal against a tight channel. There's a high probability of a deep pullback. This isn't the best example of that. It looked a lot more like a trading range, and I thought it was more of a trading range than, a strong move down. But either way, I just decided to let it go just because this was a little bit too much for me. But nothing wrong with this 3 bar micro channel. It's pretty good. And you have a micro gap. Trades with micro gaps have an increased chance of winning. I believe I got 80% chance that the trade wins if it has a micro gap, and 60 something. I don't know. It's somewhere in my my sheet, but 60 something% chance, high 60% chance of a trade winning when it does not have a micro gap. There's all sorts of influencing factors, though, obviously. And then 43 and 44 consecutive bull bars closing near their highs, a really strong breakout and great follow through. Low probability that you get a full 1R of 43 on 44. So really strong breakout and follow through for the bulls. And then a really strong third bar, 45. What's the issue with this trade? Well, it's 3 legs up, 1, pullback 2, pullback 3, and you did not break out of the 21 high. You can see we never ended up breaking out above the 21 high. We never closed above it. When I saw 45, I knew it was a late leg, but I kind of just didn't really care because the bars were so strong. It's one of the better 3 bar micro channels I've seen in a while. I was not, this is considered in my definition a surprise against me, but it wasn't that surprising to get that against me just because I was buying high in a trading range. If you're going to buy high in a trading range, you have to be expecting to sit through a deep pullback. We didn't quite close the gap with the 41 high. You can see we had a 1, 2, 3, 4, 5, 6, 7 bar micro channel. So odds are first reversal is going to fail and the bears get one more leg down like they did on 54, which just ended up becoming 3 legs down, and probably going to get buyers pretty soon after you get those 3 legs down, simply because price structure has completed, and these bulls, it's unlikely that they're going to get trapped. A lot of my losing trades in the 3 bar micro channel, the vast majority of them are not buying and selling the tops and bottoms of trading ranges. Granted, late legs is certainly an area where there are a lot of losers, but buying and selling the tops and bottoms of trading ranges, you'll usually be okay if you have a 3 bar micro channel, simply because the pattern is strong. But you're going to sit through a deep pullback is the thing. So I could have looked to enter lower, but I really just didn't want to miss the trade. So I bought, scaled in, and I got out on 55 as it came back. Basically took my half an R. I wasn't super happy about it because I was pretty convinced that we were going to get the full R, which we did. As a reminder to everybody, you take 2 ticks off the top of the symmetrical second leg. So 2 ticks from this high is the high of 57. And it's not surprising that we reversed in that area, but I would have been very surprised if the traders from 43 through 45 ended up getting trapped, and they did not. 55, 56, 57. If 45 is the late leg, then 57 is an even later leg, and it also did not break out. So I only took 45 because of how strong the bar closed. This is weak. This is really not what you want to see out of a 3 bar micro channel. So I just decided to let this one go. And I did sell the close. It became a full lose. Yeah, it became a full loss. I did sell the close of 63. I didn't quite get the full target on it just because if you were sitting, it moved so fast that by the time I was even getting to set my profit target, it had already hit my profit target. So I just hit flatten at the market. I basically got out 2 ticks higher than I should have. And then that was it for me on the day. It's obviously a 5 bar micro channel, so you should get a deep pullback, but the first reversal should end up failing. And started with an outside bar. Odds are when you start with an outside bar, you're going to test the outside bar. And then this is not that great. It's a second leg up against a tight channel. So this is the type of thing you don't want to be buying against tight channels. But all right, the daily chart. It's climactic, but we are at the top of the channel. It's a bit of a climactic move, but I mean the bulls, they keep going, so we could continue higher until it's been climactic, but until the bears do something worth mentioning, it's a bull trend. I mean, it's an infinite bull trend, but still. And then obviously the weekly chart ending tomorrow, the bulls would like to get a strong close. As a reminder to everyone, there's an FOMC meeting next Wednesday. It's always on Wednesdays, but just something to keep in mind with your trading.